welcome to my channel, Commerce World. Today in this video, we are going to learn the most important questions relating to the popularity of the subject, which is also regarded as the king of commerce. You all know that. Which subject is regarded as the king of commerce? Exactly. Accountancy is considered as the king of commerce. This is a subject, but basically we say that accountancy is not a subject, it's a language of business. Exactly. How we are going to deal in the business, exactly we are going to use the terms relating to accounts. So in this video, dear guys, you are going to learn the wonderful terms which is going to be used in an accounting. I can cover the complete basic terms as well as the questions which are going to be asked in the interviews for commerce graduates. So let's not waste the time. Let's start with the questions which are going to deal in this video. This video is comprises of total 100 questions which are relating to accountancy subject. These are the questions which are very helpful for the students, those who are going to appear for the first QC examination, and the students from 11th grade from the CBSE background, and the students of IA, that is from IGSE background, and also the students, those who are appearing for the first BBA in the financial accounting subject. And also these questions help the students to attempt the interview as well. So let's start with the first slot. I have divided this entire video into 10 slots. Each slot comprises of 10 questions. So each slot 10 questions into 10 into 10, total 10 slots of 100 questions. Let's begin with the first slot. In first slot, which are the 10 questions we are going to discuss? You can see on the screen now. So one is accountancy, then accounting, then bookkeeping, then 4 external uses of accounting, and 4 internal uses of accounting, and 3 branches of accounting, and qualitative characteristics of accounting, and what do you mean by transaction, and what is cash transaction, and what is credit transaction. So let's start with the first question. So we have the first question, what is accountancy? So accountancy means, just remember TPA. T stands for theory, and P stands for practice, and A stands for accounting. When you combine these 3 terms, TPA, it becomes the meaning of accountancy. I can redefine the meaning of accountancy. Accountancy means it's a theory and practice of accounting. Accountancy means it's a theory and practice of accounting. Let's move for the second question. We have accounting. What do you mean by accounting? In order to remember the meaning of accounting, just you can categorize into 6 alphabets. That is IMR, CSI. So what is this IMR and CSI? So accounting is the art or a process of identifying, measuring, recording, classifying, summarizing, and interpreting the business transactions. So this accounting terms covers the entire A to Z transactions what we are going to undertake into the business. Let's move for the third question. What do you mean by bookkeeping? Bookkeeping means it's a systematic record of day-to-day transactions in the books of accounts. So recording of transactions in the books of original entry or recording of transactions systematically in day-to-day related transactions, it becomes the bookkeeping. Next, what do you mean by which are the 4 external sources of recruitment? In order to remember the external sources of recruitment, just remember CTC. One is C is the creditors, T is the tax authorities, another C stands for customers. CTC. C are the creditors and the T is the tax authorities and C will be the customers. And move on to the next question. Which are the 4 internal users of accounting? The 4 internal users of accounting, you can remember with the help of BSC code. B for board of director, S for shareholder, and C for chairman. Let's move to the next question. The next question is, which are the 3 branches of accounting? Accounting comprises of 3 branches. Just you can remember with the help of one more code, FCM. F is the financial accounting, C is the cost accounting, and M is the management accounting. The entire accounting is based with the 3 branches, financial accounting, cost accounting, and management accounting. As the BCom guys, those who are dealing with the first BCom, they are going to deal with the financial accounting. The students of second BCom, they deal with the cost accounting, and students for the final year BCom, they deal with the management accounting. Next, move to the next question. The next question is 4 qualitative characteristics of accounting. 4 qualitative characteristics of accounting. This you can remember with the help of code RRCC. 2 points from R and 2 points from C. So one R is reliability, another is relevance, and C for comparability, and C for consistency. So reliability, relevance, comparability, and consistency are the 4 qualitative characteristics of accounting. Let's move to the next question. Transaction. What do you mean by transaction? Transaction means everything or anything which is measurable in terms of money, which becomes a transaction. So anything which is measurable in terms of money, it is called as transaction. So again, transaction is categorized into 2 types, cash as well as credit. Let us understand what we mean by cash transaction. So what is cash transaction? It is a transaction in which cash is settled immediately. When cash payment is done immediately, it becomes the cash transaction. Okay, then let's move for the next question. What is credit transaction? So credit transaction is one where the cash payment is not going to be settled immediately. If you're not going to make the cash payment immediately, it becomes the credit transaction. These are the 10 questions relating to the first slot. Fine. Now we are going for the second slot of 10 questions. Which are the 10 questions we are going to discuss in the second slot? The list of questions are assets, liabilities, capital, current assets, fixed assets, short-term liabilities, long-term liabilities, entity, profit and loss. These are the terms I'm going to tell you in the slot 2. So let's start with the first question, that is asset. What do you mean by assets? Assets are the economic resources of the business. Means whatever the own things of an owner that are said to be an assets. In accounting term, we say that the economic resources of the business are said to be assets. Okay. For example, you can say building, land, cash, stock, machinery. Next, move to the liabilities. The second question is liabilities. Liabilities are the obligations to pay the debt. Okay. Liabilities are said to be obligations to pay the debt. So whenever we borrow money from the bank loan or whenever we borrow the money from our outsiders' liabilities, it becomes the liability of the firm to pay that debt. For example, we can say creditor as well as the bills payable are said to be a liability. Fine. Moving for the third question, capital. What is capital? It is an amount of money which is invested by the owner into the business. Basically, owner is also said to be a proprietor. So the amount of money which is invested by the owner into the business is said to be a capital. Next, moving to the fourth question, current assets. What are the current assets? Current assets are those assets which can be easily converted into cash in a short period of time. Okay, in a short-term basis. Or the assets which can be converted into cash on short-term basis is said to be a current assets. I can tell you the example of current assets, like we have a stock and bills receivable and debtors. These are the example for current assets. Next, move to the fixed assets. So fixed assets are those assets which are purchased by the firm for the purpose of using the long run, for the usage of long run. So whichever the assets we buy for using it for a long run basis, those assets will become the fixed assets. I can say an example like machinery, computer, laptop, building. These are all fall in the category of fixed assets. Next, let's move to the short-term liabilities. The question is short-term liabilities. So just now we understood about the liabilities. Liabilities are the obligations of debt. Liabilities are the obligations to pay the debtor. But what is this short-term liabilities? Short-term liabilities are those liabilities which has to be payable within a period of 1 year or within 12 months. When we want to pay the liabilities, those liabilities fall in the category of short-term liabilities. Then we go for long-term liabilities. What do we mean by long-term liabilities? Long-term liabilities are those for which we can make the payment more than 1 year. If your firm is paying the payment of the liabilities more than a 1 year period, those fall in the category of long-term liabilities. I can say the example for long-term liabilities is debenture. For short-term liabilities, we can say bank overdraft. Next, move to the next question, profit. So how to define profit in accounts? Profit is nothing but the excess of revenue over expenses is said to be profit. The excess of revenue over expenses, it becomes the profit. We can define the formula to profit. Profit is equals to revenue minus expenses. And opposite word to profit is the next term is loss. What do you mean by loss? Loss means the excess of expenses over revenue is said to be a loss. We can define with the formula loss is equals to expenses minus revenue is the formula to be used for loss. The last question is entity. The term entity means in reality a thing or person which have definite existence. I can clear it. Entity is nothing but a thing or a person which have a definite existence, that is said to be an entity. It is nothing but business. For business, another term we use as entity. Let's move to the third slot. In third slot, we are learning the set of 10 questions. The 10 questions are what is drawings, debtor, creditor, revenue, expenses, expenditure, gain, discount, trade discount and cash discount. These are the 10 questions relating to slot 3. Let's start from the first question. What is drawings? Drawings means the cash or the goods which is withdrawn by the proprietor for his personal use. Basically, the owner or the proprietor of the business, he may take sometimes cash from the business or he may withdraw the goods from the business, which falls in the category of drawings. Means the amount of cash or goods withdrawn by the proprietor from his business is said to be a drawings. Next, we have debtor. Debtor is a person who owes money to the business. The firm which has to receive money from any of the customer that becomes the debtor. So only the term meaning will be this way. Debtor is the person who owes money to the business. Let's move to the next term, creditor. Creditor is a person to whom business owes money. If any firm is having money due to the business, money due to the another firm or some suppliers, that falls in the category of creditor. So the meaning of creditor is this way. Creditor is a person to whom business owes money. Next, the question is, what is revenue? Revenue means it's an income which is generated by the business from the sale of goods. When the firm sells the goods, the income what they received, that falls in the category of revenue. Revenue means the amount which is generated or the income which is generated from the sale of goods. It is an income generated from the sale of goods is said to be a revenue. Next, we have a term called as expenses. Expenses means any cost incurred in order to earn the revenue. Sometimes we are going to incur some cost in order to generate the revenue. The cost which is spent, that fall in the category of expenses. Means the cost incurred to generate the revenue is said to be an expenses. Next, we have a term called as expenditure. The term expenditure means spending money to receive some benefit or some property or service. It falls in the category of expenditure. Means spending money to receive benefit or services or property. It is said to be an expenditure. I can say an example, payment of salary for service rendered. Next, the term we have is gain. Gain means it's a profit which is arises from the events or the transactions which are not regular but are incidental to the business is said to be a gain. Gains are the profits which are arises from the events or the transactions which are not regular to the business but incidental. It is said to be a gain. I can say winning from the court case is one of the gain, or winning from the lottery is also said to be a gain. Next, move to the question called as discount. What do you mean by discount? Discount means the deductible price from the deductible price from the sale of goods is said to be a discount. So the amount of money which is deducted from the price, it becomes a discount. What do you mean by trade discount? Trade discount means here deduction of agreed percentage of price from the list of price when they are offered at the time of sale of goods. Basically, this type of trade discount will be given by the wholesaler to the retailer at the time of sale of goods. That is said to be a trade discount. What do we mean by cash discount? Cash discount, it is also one kind of discount which is given to the debtors if they pay the money at a stipulated period of time. So it is the amount of deduction of price or the discount which is given to the debtor if he make the payment at a stipulated period of time. That is said to be a cash discount. Thank you. Dear guys, we are studying to the fourth slot of the question. As you have seen that in the first three slots, we successfully completed the 30 set of questions. Now in the fourth slot, the another 10 questions are coming on screen. We can just have a look on these 10 questions. Now in this fourth slot, the list of 10 questions is what is goods and what do you mean by stock or inventory and which are the different systems of accounting and what do you mean by single entry system and what is double entry system and what do you mean by accounting equation. Which are the classification of accounts and what is personal account, what is real account and what is nominal account. So these are the 10 questions I'm going to explain you in the slot 4. Let's start with the first question. Question number 1. What do you mean by goods? Goods are the unsold value of materials which is kept for the purpose of sale or the materials which is going to be dealt by trader. So traders are nothing but it might be a wholesaler or retailer or it might be a agent as well. Next, even I can say the example for goods, it might be like a scale, pencil, together we call as a stationery. Fine, moving to the next question. Stock. Stock is also called as inventory. Basically, stock is represented as a current asset. Now, what do you mean by stock here? Stock is nothing but the unsold materials which is kept for the purpose of sale. Okay, so it might be a raw material or it might be a semi-finished goods or it might be a finished goods. That's the meaning for stock. Move on to the next question. So the next question is, which are the different systems of accounting? So accounting has basically two systems. One is single entry system and other is double entry system. Remember, there are two systems in accounting. One is single entry system, another is double entry system. So moving to the next question. What do you mean by single entry system? That is SES. Single entry system means it is a system of accounting under which only one aspect of each and every transactions are recorded. Means basically we have two aspects, debit aspect as well as credit aspect. But in case of single entry system, only one aspect we are recording. Hence it is called as incomplete record. Remember, single entry system itself is called as incomplete record. And also it is one of the unscientific method of recording the business transactions. Why? Because only one aspect of each and every transaction is recorded. That's the meaning of single entry. Let's move for the next meaning. What do you mean by double entry system? So double entry system is one of the complete system. Under this system, both the aspects of each and every transactions are recorded. Means debit aspect also recorded as well as credit aspect also recorded. Hence it is called as complete record. Moving to the next question. What do you mean by accounting equation? The most dynamic and fabulous and important question which is going to be interacted and many times it's going to be asked in the interview. So what is accounting equation? Accounting equation means the total assets of a firm of a concern should be equal to liabilities and capital. Means the total assets of the firm or the concern must always be equal to the liabilities plus capital. That's become the accounting equation that we can understand with the help of equation also. That is assets is equals to liabilities plus capital. In case if you want to find the liabilities, very simple, liabilities is equals to assets minus capital. Or further, if you want to find capital, very simple, assets minus liabilities. Always remember the difference between assets and liabilities always goes to capital. This is how you can learn accounting equation. Assets is equal to liabilities plus capital, liabilities is equal to assets minus capital, and capital is equal to assets minus liabilities. Yes. Moving to the next question. Classification of accounts. Which are the major classification of accounts as per the English system? So as per the English system, accounts are classified into three types. You can see the three types here. Number one is personal account, number two, real account, and number three is nominal account. So according to English approach, accounts are classified into three types: personal account, real account, and nominal account. Let's move to the next question. What do you mean by personal account? So personal account is relating to persons or institution. It is an account of a person or institution, or we can give an example like Ram account, Rahim account, Sita account. These will fall in the category of personal account. Again, personal account is subdivided into artificial personal account as well as representative personal accounts. Now, next question. What is real account? So real account is an account of property or assets. Okay, it is an account relating to property or assets. I can give an example for real account like stock, machinery, building, furniture. These are all assets which falls in the category of real account. Now, the last question of the slot 4, that is what is nominal account? So nominal account is an account which is relating to incomes as well as expenses. Obviously, when we do our business or when we run the business, our day-to-day activities, there are many expenses are going to be income. At the same time, the business is going to receive some incomes. Okay, so when we categorize these expenses as well as income in one particular account, that account is said to be a nominal account. So nominal account is an account of expenses and incomes. For example, salary, commission, rent. Fine. Inclined, we are stepping to the slot 5. Again, a list of 10 questions are coming forward on screen. You can have a glance on each. So which are the questions we are going to deal in slot number 5? Number 1, accounting concept. Number 2, business entity concept. Number 3, going concern concept. Number 4, accounting period concept, then cost concept, then dual aspect concept, revenue recognition concept, matching concept, and last but not least, there is accrual concept. These are the 10 questions of slot 5. I'm going to explain you one after another. Let's move on to the question number 1. Question 1. What is accounting concepts? Always remember, concept means just you have to remember two letters, I and A. I stands for ideas and A stands for assumptions. So accounting concepts are ideas and assumptions which are fundamental for accounting transactions. So without any ideas and assumptions, one cannot predict the concepts. So always with the help of I and A, you can remember the meaning of accounting concepts. Accounting concepts are ideas and assumptions which are very essential, which are fundamental for accounting transactions. Next, move to the next question. Business entity concept, the most fabulous dynamic concept among all the 10 concepts, that is business entity concept. What does this concept say that? Very clear. This concept always says that the business is totally different, owner is different. Means when we are recording the transactions in the books of accounts, always we have to focus from the business point of view, not from the owner's point of view. Means business is separate entity from the owner. This concept tells about that, business entity concept. Next, moving to the third, money measurement concept. What does money measurement concept says that? So only those transactions has to be recorded in the books of accounts which is measurable in terms of money. Means cash receipts and cash payments. So which is measurable in terms of money. Such transactions has to be recorded in the books of accounts which is said to be a money measurement concept. Next, moving to the next concept, going concern. What is this going concern? Dear guys, so every entrepreneur or every businessman, he or she start the business with one motto that he has to survive in the market for a long period of time. So no businessman will start the business with one intention that today I'm starting the business, tomorrow obviously I have to close the business. Absolutely not. So everyone expect to survive in the market for a long period of time and to create the market share. That's why this concept says that the business has to run for a long period of time, means the business has to going concern. It should not stop. It should continue for many more years. That's the concept says going concern. Moving to the next concept, that is accounting period concept. This is really something idea of, frankly speaking, I like to explain very clearly. Accounting period concept talks about a period of 12 months, which we say as an assessment year, that is commencing from 1st of April and ending to 31st of March. In fact, we are not going to follow the calendar year, which starts from the 1st of April and ending 31st of December. We never follow the calendar year. We are always following accounting system, that is financial year or assessment year, commencing from 1st of April and ending to 31st of March, a period of 12 months. That is said to be accounting period concept. Fine. Moving to the next question. What do you mean by cost concept? Cost concept says that when an expense is incurred for buying any kind of assets like purchase of machine or purchase of plant or so on. So the cost of the machine along with the expenses which has been incurred for the transportation, for the installation, for making the machine ready for the purpose of operation, till that whatever the expenses incurred, all the expenses has to be added to the cost. So that cost price has to be recorded in the books of accounts. That tells about the cost concept. Means cost plus installation charges plus transportation charges, all these expenses to be added. So finally to record in the books of accounts, that concept says about the cost concept. Now moving to the next one, dual aspect concept. As I told you that we have two aspects in accounts. One is debit aspect as well as the credit aspect. What do you mean by dual aspect concept? Dual aspect concept says that receiving of some benefit of some value and giving of some benefit of other equal value. This is called as dual aspect concept. Means this depends on the accounting equation as well. That is assets is equals to liabilities plus capital. If you are investing money into the business, means cash comes inside the business, which will be recorded in the assets part. At the same time, you are going to record in the capital part. So that indicates that dual aspect concept. So moving to the next one. Let us understand about revenue recognition concept. The concept of revenue recognition says that the business transaction should be included in the accounting records only and only when it is realized. Okay, so when the transactions has been realized, then only you can include in the accounting records. For example, when you do credit sales, okay, on the date of credit sales only it has to be recorded. Fine. Moving to the next concept, matching concept. What does the matching concept says that? So this matching concept says that the profit or loss of the business or the accounting period of all the expenses should be matched with all the incomes. Means all the expenses which you are going to record in the profit and loss account, that all expenses has to be matched with the incomes. That says about the matching concept. This concept says that the revenue accrues in the year in which it is earned, not in the year in which it is realized. Very simple. So all the revenues which has been earned in the year, it will be taken as an accrue and not in the year in which it is realized. Fine. These are the 10 questions of slot number 5. Okay guys, come back to the next slot, slot 6. Here we have another 10 list of questions. You can see on the screen which are the questions we are going to discuss in this slot. One is journal, journalizing, narration, balancing, ledger, posting, debit balance, credit balance, and subsidiary books, and the famous question journal proper. Let's understand one by one. The first one, journal. What is journal? Journal means recording day-to-day transactions in a chronological order, which is also called as original entry. Always remember, journal is said to be a original entry. So the recording of transactions in a chronological order, it becomes the journal. Move to the next question. What is journalizing? Journalizing means the process of passing the journal entries. The process of passing the journal is said to be a journalizing. Means recording of journal entries is called as journalizing. Next, what is narration? Very simple. Narration is a brief explanation which is written below the journal entry. It is an explanation to the transactions. Fine. Next question. What do you mean by balancing? Very simple answer. Balancing means ascertaining or finding or making the total of debit side as well as the total of credit side. When we check the totals of debit columns as well as the credit column, this process is said to be a balancing. Next, move to the next question. What do you mean by ledger? Ledger is a principal book. Ledger is a principal book in which the accounts are kept relating to assets, expenses, persons as well as incomes. So when we maintain separate account for the income, when we maintain separate account for the assets or capital or for the personal account, it becomes a ledger. So remember, ledger is also called as a principal book. Next. So what do you mean by posting? Posting means the process of transferring the journal entries to the principal book, that is ledger, is said to be a posting. So next, moving to the next question, what do you mean by debit balance? Debit balance means when the debit side of an account is more than the credit side, it is said to be a debit balance. Means debit side totals are more compared to the credit side. This is called as debit balance. And what do you mean by credit balance? Credit balance means that when the credit column of an account is more than the debit column, or the credit side balance is more than the debit side balance, then this is called as credit balance. Next, moving to the subsidiary books. Subsidiary books are also called as special journals. Subsidiary books means there are special journals in which each and every transactions are recorded. Okay, there are the special journals just like cash book, purchase book, purchase return, sales return, all these called as the subsidiary books. So there are the special books in which all the transactions are recorded. Now moving to the journal proper. So journal proper means the transactions which we cannot record in the subsidiary books, which are maintained separately under journal proper. Example for journal proper are adjusting entries, opening entries, and rectifying entries. So opening entries, adjusting entries, rectifying entries are going to be recorded in the journal proper. Fine. Moving to the 7th slot of the 10 questions. You can see on the screen which are the 10 questions we are going to discuss right now. What is cash book? What is single column cash book? What is double column cash book? And petty cash book. And also knowing about the most fabulous question, contra entries, meaning of bank overdraft, meaning of BRS, that is bank reconciliation statement, passbook, trial balance, and balancing. Moving to the first question, what is cash book? Cash book is a subsidiary journal in which all cash receipts and cash payments are recorded. It is one of the subsidiary journal or special journal in which cash receipts and cash payments are recorded. We have different types of cash book. There is a single column cash book, there is a double column cash book, there is a petty cash book. Let us understand in detail each question. Next question is, what is single column cash book? Single column cash book is a type of cash book in which only cash receipts and cash payments are recorded. It will be having one amount of column, that too relating to cash. Means if we receive the cash receipts, we need to record in the receipt side. If we make the payments of cash, we need to record in the payment side. That is the single column cash book. Moving to the next question, double column cash book. The name itself indicating that double column. What does it mean? Means towards debit side, we'll be having the two amount column. Towards credit side, we'll be having the two amount columns. The two amount columns are cash column as well as bank column. Means double column cash book is one of the type of cash book in which both cash and bank transactions are recorded. Okay, we are going to record both cash as well as the bank transactions. Now, moving to the next is petty cash book. The word petty means small. So it is one type of cash book in which all the small expenses are recorded, such as like printing, stationery, cottage, coolie, advertisement, etc. Next, moving to the next question, what do you mean by contra entries? Contra entries are those entries which are going to be appear both the side of the cash book, debit side as well as the credit side. So popularly, we have two entries of contra. One is depositing cash into the bank, another is withdrawing cash into the bank, which results in cash as well as bank. For example, when we deposit cash into the bank, the journal entry will be bank account debit to cash account. When we withdraw cash from the bank, the journal entry will be cash account debit to bank account. Such entries are contra entries and it is denoted by the symbol C. Okay, so we have to mention C in the cash book in one of the ledger folio column. Fine. Moving to the next question, bank overdraft. What do you mean by bank overdraft, which we say BOD? BOD in different terms, we will say sometimes board of director, but here BOD is a bank overdraft. Bank overdraft means it is a situation where our withdrawals are more than the deposits. When you withdraw more than the deposits, then the difference of amount is said to be a bank overdraft. Bank overdraft is basically liability. The next question is BRS, that is bank reconciliation statement. So bank reconciliation statement is a statement which is reconcile the bank balance as per the passbook and the bank balance as per the cash book. To reconcile the bank balance as per the cash book and as per the passbook, we are going to prepare one statement which is said to be a bank reconciliation statement. Okay, next moving to the what is passbook. So passbook is a copy of customer account. Passbook is a copy of customer account which appears in the bank. So usually bank gives it to the customer. Okay, fine. Moving to the next question, trial balance. Trial balance is a list of total debit balances as well as the credit balances. So always remember, trial balance is a statement. It's not an account which shows the list of total debit balances and total credit balances. And finally, the last question is balancing. Balancing is very simple. So finding the total amounts of, or finding the difference of total debit side as well as the total credit side, which becomes the balancing. Yeah. Dear guys, we are moving for the 8th slot of the other 10 questions. You can see on the screen right now the list of 10 questions which I am explaining in the 8th slot. The questions are: what do you mean by financial statement, and what do you mean by trading account, and what is cost of goods sold, what do you mean by gross profit, and what is operating profit, and what is net profit, and what are the closing entries, what are the opening entries, and what do you mean by intangible assets, and finally, what is balance sheet. Fine, let's start and discuss one by one in detail. The first question we have here, financial statement. The financial statements are the final accounts which are prepared at the end of the accounting year. Means the transactions which takes place from the 1st of April up to 31st of March next year, the duration of 12 months transaction will be recorded in one particular statement which is said to be a final accounts, for which we call as a financial statements. Basically, financial statements are two. One is trading and profit and loss account, another is balance sheet. Okay, fine. Moving to the next question, what do you mean by trading account? Trading account is the account which ascertains the results of gross profit as well as gross loss. Okay, it is an account which is prepared to find out the gross profit or gross loss. Next, we have next question. The most important thing is cost of goods sold. Yeah. Now the question is called as, what do you mean by cost of goods sold? Very simple. For cost of goods sold, in short form, we can say COGS. COGS. COGS stands for cost of goods sold. Cost of goods sold is a total of opening stock plus purchases plus direct expenses minus closing stock. In the same way, we can derive the formula also. COGS is equals to OP plus P plus DE minus closing stock. Here, direct expenses are two expenses. One is carriage inward and another is wages. Together, carriage inward and wages, it becomes the direct expenses. So the formula to find the cost of goods sold is opening stock plus purchases plus direct expenses minus closing stock. And always remember, cost of goods sold plus gross profit, when we add these two, it becomes the RFO, that is revenue from operation. You can see this here, RFO, that is revenue from operation, is equals to COGS plus gross profit. Means in order to find the revenue from operation, that is nothing but a turnover or sales or the revenue, to find that you need to add cost of goods sold plus gross profit. Okay, moving to the next question, what do you mean by gross profit? Gross profit means the excess of sales over purchases and direct expenses. This is called as gross profit. The excess of sales over purchases and direct expenses is said to be a gross profit. And basically, gross profit is the result which you are going to get in the trading account. Now, moving to the next is operating profit. So operating profit is most important thing which we are going to get through the profit and loss account. So operating profit means the excess of operating revenue over operating expenses. Very simple answer. The excess of operating revenue over operating expenses, it becomes the operating profit, or we can use the formula operating profit is equals to operating revenue minus operating expenses. Next. Now, what do you mean by net profit? Net profit means, very simple answer, the excess of revenue over expenses is called as net profit. The excess of revenue over expenses is called as net profit. Now the question is, what are closing entries? Closing entries are those entries which are passed for transferring all the revenue as well as the expenses items to trading and profit and loss account. Very easiest answer. The closing entries are those entries which are passed for transferring all revenue items as well as the expenses items to which account, that is trading as well as profit and loss account. Opening entries are those entries which are going to be prepared at the beginning of the year to record the items which are going to be appear in the balance sheet relating to assets, liability as well as the capital. Now, moving to the intangible assets. The next question is, what is intangible assets? Intangible assets are those assets which cannot be seen, which cannot be touched, but it can be realized as well as sold. Example, goodwill, copyrights, patents, trademarks, as well as licensing and franchising. These are the examples for intangible assets. Next, the last question is, what is balance sheet? Balance sheet is one of the statement which shows the total assets as well as liabilities and capital of a business concern. This is a statement which shows the entire financial position, like relating to assets as well as liability and capital. Okay, the beautiful and handsome guys, now we are moving for the slot 9. Another list of 10 questions you can see on the screen now. The list of 10 questions of the slot 9 are, what is error? what are the types of error, what is error of principle, what is error of omission, what is error of commission, and what are compensating errors, what do you mean by suspense account, and what is the rectification of errors, and what is error of complete omission, and what is the error of partial omission. These are the list of 10 questions we are discussing in the slot 9. All the questions are very important relating to the chapter rectification of errors. Let's move by discussing one by one. The first question we have, what is error? Error means any unintentional mistakes committed by the bookkeeper or accountant in the books of the accounts, it becomes the error. It's not an intentional mistake. These are the unintentional mistakes which is committed by the bookkeeper in the books of accounts is said to be an error. Next, we have the next question, types of error. Types of error are classified into 3 types. Error of principle, error of omission, and error of commission. Error of principle, error of omission, and error of commission. These are the 3 different types of errors. Now let's discuss one by one in detail. The question number 3. What are error of principles? Error of principles means the errors which are committed or while if the accountant violate the principles of accounting while recording the business transactions in the books of accounts, those errors will called as error of principle. Means the accountant, if he forget to follow the principle of accounts while recording the transactions in the books of the accounts, or if he violate the principles, such errors will become the error of principle. Next we have error of omission. Error of omission means omitted. The accountant is going to be get omit. Means he has not recorded the transactions in the books of accounts, or he did not post the transactions in the books of accounts. Such type of error are said to be an error of omissions. Okay, means he didn't record, he forgot completely, omitted. Next, moving to the next error, error of commission. Error of commission means any error made by a bookkeeper while recording or while posting or while totaling or while balancing. Recording, posting, totaling, balancing. While doing these 3 tasks, if any error is committed, such errors are called as error of commission. Now the question is, what are compensating errors? Compensating errors means when 2 or more errors are committed in such a way that the net effect on the debit side and credit side is nil, such errors are said to be a compensating errors. Next, moving to the next question, what do you mean by suspense account? Suspense account is an account which is opened when trial balance does not get tallied. In order to tally the trial balance, we'll add one extra account which is said to be a suspense account. So it is an account which is opened when trial balance does not get tallied. Next, moving to the next question, what is rectification of errors? Rectification of errors means correcting the errors or rectifying the errors with the help of journal entries is said to be a rectification of errors. Or correcting or rectifying the errors which has been committed, which are found in the books of the accounts with the help of journal entries is said to be a rectification of errors. Next we have error of complete omission. Complete omission means the entire transaction has been not recorded in the books of accounts. Completely forgot, completely omit. Such type of error is said to be an error of completely omission. And error of partial omission. Next question is error of partial omission. Partial omission means the part of the transaction is recorded, rest of the part is not recorded. Means debit part is recorded, credit is not recorded, or credit part is recorded, debit part is not recorded. Such type of errors is said to be a partial omission. Okay, we are going to the last part, which is very important one here. Here in the last part, 10th part, I have been just segregated in the form of abbreviations. A list of abbreviations we are going to discuss in this slot. It is a 10th slot. So which are the abbreviations we are discussing which are purely relating to accountancy subject? So one is AAA, AAA, then AICPA, then GST we have, then ICAI is there, then IASB, then ASB, then GAAP, GAAP is there, and IAS is there, then ICAI is there, then finally IFRS, then we have a JF, then CD, BD, and CGST. So these are the things we are going to discuss in this last slot, which are related to abbreviations. Let me tell you one by one. The first one is AAA. AAA, AAA stands for American Accounting Association. So AAA stands for American Accounting Association. The next one is AICPA. AICPA stands for American Institute of Certified Public Accountants. American Institute for Certified Public Accountants, AICPA. Next is GST. It's a basic term. You all know that GST stands for Goods and Service Tax. Then we have ICAI. ICAI stands for Institute of Chartered Accountants of India. Institute of Chartered Accountants of India. It's a central body. Next, we have IASB. IASB stands for International Accounting Standard Board. Then ASB. ASB stands for Accounting Standard Board. Then GAAP. GAAP stands for GAAP, that is Generally Accepted Accounting Principles, GAAP. Then we have that is IAS stands for Indian Accounting Standards. Then we have IFRS. IFRS stands for International Financial Reporting Standards. And CD basically we say carried down, and BD we say basically brought down, and JF stands for Journal Folio, and LF stands for Ledger Folio. These are the basic terms. And finally CGST stands for Central Goods and Service Tax. So dear guys, in this 10 slot, whatever the questions I have covered, it is almost all relating to accountancy, especially for 11th grade, and even it will be helpful for the students, those who are studying the first BBA, and also the students who are dealing with the subjects financial accounting, and some students, those who completed the graduation, if they want to crack the interviews. Basically, this type of questions they may ask in the interviews. So wish you all the very best for your interviews as well as for the examinations. So please go through all the questions so that it will be helpful for you. If you like the video, please share it and give me a valuable comments. Thank you all. Love you all.